This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, July 28, 2026, and this is the New York pre-market. Now, let's get into it.
Bitcoin is sitting at $63,421, down 2.37%, staring directly into a structural support zone that is being tested by a liquidity vacuum. We are seeing a 24-hour high of $65,546 collapse to these levels, and the order books are thinner than usual.
It's worse than thin grid. The fear and greed index is at 14/100. That is extreme fear. We aren't just talking about a correction. We're looking at a psychological break where retail participants are actively capitulating.
And that sentiment is being weaponized by flow data. Iranian crypto outflows have spiked 700% following US-Israeli airstrikes. That is not organic selling. That is forced liquidation, draining exchange reserves in real time.
Good morning. This is ShadowQuant Crypto Edition, pre-market analysis for Tuesday, July 28, 2026. Let's look at the schedule. The primary driver for this session is the Federal Open Market Committee decision later this week. Markets are currently pricing an FOMC caution, with Bitcoin futures demand falling to 2024 lows, suggesting institutions are withholding capital until rate clarity emerges. There are no specific earnings reports for major crypto-listed entities scheduled for this hour. But the macro backdrop is dominated by this monetary policy uncertainty. Apex, what does this mean for our opening stance?
It means the bid side is empty. With futures demand at 2024 lows, the market lacks the leveraged fuel to push back against the geopolitical sharks. We are in a pure risk-off environment until that FOMC meeting concludes.
Here is the snapshot as of 9/19 ET. Global crypto market cap is down 2.47%, totaling $2,258,335,856,164.17. 24-hour volume stands at $80,931,721,335.54. Bitcoin dominance has risen to 56.38%, while Ethereum sits at 10.9%. In the VIX, we see an elevated regime at 18.58, down slightly from yesterday's close of 18.7, but still signaling broad equity market stress. Let's dive into the headlines moving this chaos. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following US-Israeli airstrikes. CIPHER, this is your domain. How is this flowing through the system?
It's causing a massive hemorrhage on the exchange side. These outflows are hitting hot wallets and cold storage simultaneously, effectively removing supply from the order books of centralized exchanges. This isn't just a dip buyer opportunity, it's a supply shock. The liquidity drain from these 700% spikes is exacerbating the slippage we are seeing across every major pair.
Second, CoinDesk reports that U.S. Senate housing bill includes a CBDC ban. Pulse, does this shift the sentiment landscape? Not immediately, no. The market is too consumed by the fear index at 14/100 to care about legislative wins for privacy advocates right now. When retail is bleeding out on Cardano and Dogecoin, political nuance gets drowned out by the panic. However, it does create a floor for long-term narrative support, though that's irrelevant in this extreme fear window. Third, Cointelegraph notes that Bitcoin futures demand falls to 2024 lows, asking if institutions are exiting the market. SPECTER, what's the risk here?
The risk is that there is no one left to catch the knife. When futures demand hits 2024 lows, it means the leverage players, the ones who usually step in on a 5% drop, are gone. You have spot sellers facing zero leveraged buyers. That is a recipe for accelerated downside, especially with the Iranian outflows adding volume to the sell side.
Let's start with Bitcoin. It is at $63,421, down 2.37%, with a 24-hour low of $63,055. Grid, walk us through the technicals of this support test.
We are testing the first major historical bid stack. The previous resistance at $65,546 has been rejected hard. Now $63,421 is the pivot. If we hold this, we see a consolidation wedge. But note the volume profile, it's lighter than the rejection at $65,546. That lack of absorption volume is concerning. It suggests buyers are hesitant to commit capital until the Iranian flow situation clarifies.
And they shouldn't be, Grid, because on-chain, we aren't seeing stablecoin inflows filling the gap. The USDT supply isn't expanding to buy the dip. Instead, we're seeing the exact opposite. The 700% outflow spike I mentioned earlier is literally pulling capital off the chain. There is no hidden buyer waiting at $63,055. The liquidity is evaporating.
Look at the retail reaction. Dogecoin is down 3.67% to $0.07, and Cardano is down 3.48% to $0.15. These are the canaries in the coal mine. When the meme plays and the community coins bleed alongside Bitcoin, it confirms that retail is exiting, not averaging down. The 7-day fear and greed trend is stuck at 12. People are scared to touch anything.
Which makes that $63,421 level even more precarious. Usually you'd see a wick rejection here from retail stop hunts. Today, the wicks are getting longer downwards because the stops aren't triggering buys, they're triggering cascades. If we lose $63,055, we expose the next liquidity pool, which is significantly lower.
Let's be clear about the risk here. The VIX is at 18.58. Traditional finance is nervous. When equities get spooked, crypto doesn't just correlate, it decouples on the downside harder. The fact that Bitcoin is down 2.37% while the alt basket is down nearly 5% average shows that beta is crushing alpha. If equities extend their losses tonight, Bitcoin will likely revisit those lower liquidity pools Grid mentioned. The futures demand at 2024 lows means there is no insurance policy against that equity sell-off.
Moving to Ethereum. Ethereum is at $1,888.91, down 3.33%, with a 24-hour high of $1,972.61 and low of $1,868.67. The divergence is stark.
Ethereum is showing clear weakness relative to Bitcoin. The Ethereum/Bitcoin ratio is compressing. Technically, $1,888.91 is testing a midterm support band, but the RSI is diverging negatively. Every time Ethereum tries to reclaim $1,972.61, it gets slapped back. It's a classic distribution pattern. Smart money is rotating out of L1 smart contract platforms into Bitcoin or stablecoins.
It's the rotation I predicted. We saw BNB hold up at $568.06, down only 0.97%, and Uniswap gaining 1.4% to $3.91. Capital is fleeing speculative computation and smart contract ecosystems, Ethereum, Solana, Cardano, and moving toward exchange utility tokens and governance layers that have clearer cash flow analogs or defensive moats. Ethereum is caught in the crossfire of the AI/compute narrative cooling down alongside the macro squeeze.
Don't forget Solana. Solana is down 4.58% to $73.22. That is nearly a 5% drop in a day. Solana is the favorite playground for retail degens. Seeing it drop that hard alongside Ethereum confirms that the high beta narrative is dead in the water. Retail is not just scared, they are fleeing. The sentiment on social feeds, which I monitor for pulse checks, is overwhelmingly negative. There is no buy the dip energy for Ethereum right now.
The danger for Ethereum holders is that it's becoming a proxy for tech stock volatility. With the VIX elevated and CPI expectations sticky, Ethereum often trades like a leveraged Nasdaq bet. If the Senate CBDC ban news causes any regulatory whiplash, Ethereum is the most sensitive to that noise. It's trading like a growth stock in a rate hike environment. That's a dangerous place to be holding spot.
Let's talk about the laggards. Near Protocol is crashing 9.13% to $1.66. APT is down 6.27% to $0.58. XRP is down 4.59% to $1.05. Grid, what's happening in the altcoin basket?
This is capitulation. Look at Near. Down 9.13% on poor volume, it has broken below the psychological $1.70 mark. Once that goes, algorithmic bots trigger sell orders across the board. APT at $0.58 is following the same path. These charts are ugly. Lower highs, lower lows, there is no structure left. It's a waterfall.
The flows confirm it. We are seeing net withdrawals from decentralized finance protocols associated with these chains. TVL, total value locked, is dropping as users move funds back to Bitcoin or Ethereum bridges or off-chain entirely. The 700% Iranian outflow isn't just affecting Bitcoin. The collateral effects are draining liquidity from all high-speed chains as users scramble for safety. The liquidity crunch is systemic.
And it's hurting the psyche. When you see Near cut in half overnight, people don't think opportunity. They think fraud or rug. Trust erodes fast. That's why Uniswap is the only green asset at plus 1.4%. It's not because Uni is good. It's because it's boring. It's a governance token with a fee switch. In extreme fear, boring wins. Speculative AI plays like NEEP are getting destroyed because the narrative requires hope. And hope is priced out at 14/100.
Watch XRP. At $1.05, down 4.59%, it's often used as a hedge, but it's selling off too hard. Why? Because it's highly correlated with the broader risk-on environment. If XRP breaks its key support near $1, it signals that even the safe altcoins are being dumped to raise cash. That's a warning shot for the entire non-Bitcoin market.
Finally, let's look at BNB. It's at $568.06, down only 0.97%, with a 24H high of $575.79. Uniswap is up 1.4% at $3.91. Grid, why are these two holding up?
BNB is essentially acting as a stablecoin substitute during this crisis. It's listed on the largest exchange, has deep liquidity, and is tied to the Launchpad ecosystem. Traders are using it as a parking spot. Uniswap is similar. It's a governance asset with actual revenue. They are the quality assets in a garbage bin. But notice they aren't rallying, they are just less down. BNB is down 0.97%, not up. Uniswap is up 1.4%, but the volume is thin. It's relative strength, not absolute strength.
Agreed, look at the funding rates. BNB funding is neutral to slightly positive, whereas Ethereum and Solana funding is deeply negative. Short squeezes are unlikely on BNB because there's no crowded short position. It's a quiet harbor, but once the FOMC news drops, that shelter might blow over too.
Be careful calling BNB a safe haven. If Binance itself faces regulatory scrutiny, which seems likely given the PayPay IPO news and general SEC attention, that safety vanishes instantly. The VIX is 18.58, but the regulatory risk premium for Binance is skyrocketing. Holding BNB right now is like holding gold in a bank that's about to be raided. It feels safe, but the counterparty risk is latent.
We've covered the breadth of the market. Apex synthesized this for us. Where are we?
We are in a perfect storm. Grid highlighted that Bitcoin is testing $63,421 with weak absorption, but CIPHER reminded us that the order books are empty due to the 700% Iranian outflow. Pulse showed us that retail has fled Dogecoin and Cardano, confirming that sentiment is at 14/100. SPECTER warned that the VIX at 18.58 and zero futures demand means there is no buffer. The consensus is clear. This is a liquidity vacuum, not a health check. The market is falling because no one is stepping in to buy.
And technically, without that buy-side depth, any small sell order can cause a disproportionate drop. The structure is fragile.
Structurally, yes. Until inflows return to match the outflows, the path of least resistance is down.
Emotionally, it's catastrophic. Unless the fear index ticks up, we won't see a sustainable bottom. So no buying the dip, not yet.
Not until futures demand recovers from 2024 lows and the geopolitical flow shock subsides. Wait for stabilization.
To wrap up, Bitcoin is testing $63,421 amid a liquidity vacuum caused by 700% Iranian outflows and collapsed futures demand. Ethereum is underperforming, down 3.33%, as smart contract platforms lose favor to exchange utilities like BNB. The Fear and Greed Index is at 14/100, signaling extreme fear. Tomorrow, watch the FOMC minutes for clues on rate trajectory and monitor if the Iranian outflows stabilize. Stay tuned. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.